Did the world's largest asset manager just move $2.1 trillion out of America? If true, that's more money than the GDP of most countries, and the implications are massive. But before headlines run wild, let's break down what's actually happening and what this could mean for the economy, your savings, and how smart investors should think about risk and opportunity in 2026. This isn't fear-mongering, this is data, trends, and strategic interpretation. Before we start, hi, my name is Jaylen Brooks with Modern Money, and I would like to thank you for stopping by to build wealth with us. If you find value here, please help us by simply clicking the like and subscribe button. And before we start, know that one step in the right direction can change the rest of your life. Today, we will uncover the financial shift, how to protect your wealth and prepare yourself for uncertain times like this. BlackRock is the largest asset manager on the planet, managing trillions of dollars in investments, more than the GDP of most nations. When BlackRock moves money, it's not random. It's a signal of where big capital sees value and risk. Recently, some videos and commentators claimed BlackRock moved $2.1 trillion out of US assets. Let's unpack that carefully. The evidence suggests this figure isn't about a total exit from America. Rather, institutional investors, including BlackRock, are shifting exposure within US markets, especially reducing long-term US Treasury bonds and reallocating capital globally. It doesn't mean BlackRock is abandoning the US stock market. They are still heavily invested in US equities, especially sectors like AI and growth stocks. What's really happening is diversification and risk management, not panic selling. Here's the key. Large funds constantly rebalance portfolios based on interest rate expectations, global growth prospects, debt levels, currency strength, and relative returns between regions. In late 2025 and early 2026, the US national debt exceeded $38 trillion, and many institutional managers began underweighting long-term US bonds to avoid rate-linked risk. So capital moves may look like huge exits, but in reality, it's strategic repositioning to hedge risk and find higher yields elsewhere. Money is now flowing more into emerging markets, Asia and Europe infrastructure, private credit alternatives like real estate and commodities than into traditional US treasuries. That doesn't mean America is collapsing. It means the center of investment gravity is broadening globally. We are seeing capital rotation, not abandonment. Here's the reality for you and me. US markets aren't going to vanish overnight. Institutions are reallocating, not fleeing, so interest rates and debt matter. Long-term bonds become riskier when debt rises faster than growth. Diversification is critical, and global equity exposure, commodities, and alternative assets can help hedge risk. Crypto and alternative stores of value are gaining traction because of institutional interest and capital flows toward digital and emerging assets, and that's part of the modern money conversation. If this video made you think differently about money, subscribe to Modern Money. We drop weekly videos on credit, business, income, and wealth building, so you can stop guessing and start moving with confidence. And comment below, what's the one thing about money no one ever explained to you? If $2.1 trillion really is being shifted, here's what this signals. Smart money hedges away from debt risk, and global growth markets are becoming more competitive. Also, investors are rethinking the reserve currency position of the dollar. So capital is finding yield outside traditional bonds. This is not fear, it's data-driven strategy, and strategy beats emotion every time. Thank you for stopping by today. If you want more content on building wealth, investing smart, and using modern money strategies, comment below which asset you believe in most. If you want to understand how to protect your wealth during global money shifts, subscribe to Modern Money with Jaylen Brooks. Comment below where you think institutional money is heading next. Stay informed, stay strategic, stay ahead. This is Modern Money with Jaylen Brooks. Please remember, one moment of effort becomes a lifetime of change.